Welcome to the Swing Trading with Cycles channel. It is January 6, 2023. We're going to do an update on natural gas today. If you're new to this channel, welcome. You've really done yourself a favor finding this channel. This is going to change the way you invest and the way that you trade, because it's going to allow you to think about it in a data-driven way. What we do on this channel is we analyze price action so we can understand what direction price is trending. Price can only do two things. It either trends or it's consolidating at some point, which is another way of saying it's trading in a range. That's the central premise. Prices are either trending higher, they're trending lower, or they're consolidating inside some kind of range. Those are the only two conditions. Again, obviously within trend, you can be going in either direction. And so we can use price action to analyze the direction of the trend, like this is an uptrend, for instance. And we can use price action to analyze when we're in a downtrend, like this is a little downtrend. And we can use price action to understand the range. This is kind of a range, right? And we do that on multiple time frames. So let's talk about natural gas today specifically, but do understand we cover all asset classes here. Take a look for a comment, a pinned comment. You'll see our updates on the broader stock market, for instance. And so before I get into this, I did want to call out, this is like price action analysis in the context of trying to understand trends is so important and also so incredibly misunderstood. People think you are trying to predict the future, or they're talking about reading tea leaves, and it's like, certainly there are forms of technical analysis out there that aren't data driven, don't make much sense, and I'm not going to go into that. I'm not trying to besmirch anyone. This approach is data driven. We're trying to analyze, are we in an uptrend? Are we in a downtrend? Again, those videos in the pinned comments, amazing detail about how to look if you're in an uptrend, how to analyze if you're in a downtrend, when have you hit a bottom, when have you hit a top. But the comments here are just really hilarious. So I posted this December 11th. At the time, there were calls for natural gas prices to start to increase. Like you can see, natural gas prices could be poised to break out. And mind you, the chart was showing that we were in a downtrend, right? And so I said natural gas prices could fall 40% from current levels. At the time, we were trading around $6, just above $6. So I posted this on Reddit, really honestly to get a little bit of a sentiment check to see what people were thinking. And I posted this chart here. So natural gas to 360 by the end of Q1 2023. And I've been repeating that number on these videos the last several weeks if you've been following them. If you haven't seen the videos, always you can find the previous videos in the pinned comment. And so you can read and I'll post a link to this post as well. And you can see the post actually has the first YouTube video in it. So anyone that saw this could have watched the video and see, okay, well, what is this? Is there any merit here? They could have avoided a lot of downside, or, if you're aggressive, you could actually play KOLD, for instance, KOLD. So the point here is that I want people to avoid falling into these tropes. You'll see some of the comments, the tropes around well, prices only respond to supply and demand, and you can't draw a line on a chart, yada, yada, yada. I think it's actually wonderful that people think this, because that means the real alpha is saved for people that actually understand how to sort of sift through the noise. And so with that, we have actually come below that $3.60 price target that we talked about. And so what do we do from here, right? That's what we're going to talk about in this video. We have a bottom. The question is, how big of a bottom is it? Is it going to be something that's more sustained? Is it something that's going to last more than a few hours, more than a few days? Let's talk about that. So we'll start with the 15-second chart, really zooming in here, right? Okay, so as I said, we have a bottom, and as you understand, we do multiple time frame analysis here, and so this is one of the smallest time frames you can look at. Each candle is 15 seconds of price action. For a wild trader like natural gas, it could be it's sometimes interesting to understand the sort of detail here. And so actually this is the bottom, right? This is your bottom tick at $3.50. And that is a lower low than this little bottom here, right? So to be clear, we had made a bottom here. We got our little swing low and then it failed, right? We made a new low below that. So let's examine this swing low that forms the bottom tick. So first off, notice the bottom is this candle right here. And that happened at, so this morning at 7:32 and 30 seconds, right? Like, because these are 15-second candles, so every minute you have 4 of these candles, right? So you got this big down candle, which was followed through from this candle, which is coming off of this swing high. Again, this is how you take the emotion out of it, right? You're looking for higher highs and higher lows to identify an uptrend, lower lows and lower highs to identify a downtrend. When you make a lower low, it creates a swing high. That's what happened there. You see that? Again, these are 15-second candles. So we're talking micro here. But that's how it works. You get a move on the 15-second chart, which creates a move on the 1-minute chart, the 5-minute, the 10, the 15-minute, the 30, hourly, etc. That's how price action works. That's why multiple time frame analysis is essential. If you're not doing multiple time frame analysis, you're only seeing part of the picture. So we printed a swing low below that candle. We got big follow through, and then we got this inside candle. Inside meaning doesn't make a new high above this candle, also doesn't make a new low. So what is that? It's another word for consolidation. So at this point, we're no longer trending, we're just consolidating. And then we start to move higher, right? And so to be clear, this is a little uptrend that's forming within the range of these 2 candles, right? You can kind of think of these 3 candles really forming a compound candle. I mean, if this were a 45-second chart, right, where every candle was 45 seconds, this would be one full candle that's 45 seconds, right? Or a 1-minute chart, it'd be these 4 candles, right? So these 4 candles form almost like a chasm that price has to get out of, right? So we got to get above that, and we have to get above this line, and we got to stay above this line, right? Anything in this range is really just noise. It's chop. It's it's price still trying to decide, is it continuing to fall or is it going to try to rebound? And to be clear, if we get a rebound, this candle will become the swing low because it's the one that's forming the low right now. So we did start a little uptrend, and we'll just draw that out really quickly to make sure folks can see this. Higher high, higher low, higher high, higher low, higher high. Uh-oh, that's a lower high, lower low. And then, so this is a little bit of a murky time, but again, these are 15-second candles, so we're talking about really small time frame here. And then we make another higher high, and then we kind of chop around here for a bit, right? And then we start a little downtrend. And like the one way, like if you kind of zoom out, again, that's why it's helpful to understand. I'll get rid of this that denotes the swing high. But like these 3 candles are that's the range that we need to get out of. So while we're in a small uptrend here, it's really just noise until we can break above here, essentially, right? And so you can see we actually broke above there several times and then fell back, broke above, fell back, broke above, fell back, finally broke above. And then what is this? What is this, folks? That's a higher low, a big important sign within an uptrend. It's also a swing low. That's how lows form. It's just like, again, take a look at that pinned comment. Tons of important content there. Take your time to digest it. So there's a lot of information there. But that's your higher low above the range that took us down. Like in 45 seconds, we dropped in this range, and then notice we just stayed in there for quite a while after that. And then we start a nice little uptrend, right? You can see it, right? Hopefully you can see it. This higher low, higher high, higher low. This is a little choppy. This is a little bit scary. You wouldn't have wanted it to come down this low, but we made it out of there. Higher low, higher high, higher, like, and then we're up. And then we chopped around. This is definitely a bit more chop. And then we have another like leg up. And so that's the micro as to like how we got to where we are. But then if I like zoom out from the micro, remember this little line? Notice I'll get rid of this for a second. Notice that like this is the most recent price action, and it's about 3 o'clock, by the way. So market is about to close soon. Again, it's a Friday. Notice that we took a real big dip. That was around 2:37, so like about 20 minutes before filming this. But it was nowhere near this range that we stayed within for a little bit. And we also stayed we undercut this by just a little bit, But did we undercut this? Yeah. Now, so this is essentially a double bottom. So you always want to make sure that you're thinking about the bullish case and the bearish case. So the bullish case here is, okay, we've now kind of back tested this area and now we're going to move up. The bearish case is, if we test this again, maybe it doesn't survive. The bearish case is, this is a downtrend, right? Like these are, and I'm spending a lot of time here on these lower time frames because it's important, especially if you're trading something wild like this, to kind of understand down to the lowest levels. Like, look at that. Those are all swing highs. Those are swing highs on the 15-second chart. So we're going to zoom out from here. We're also going to look at BOIL. We're going to look at KOLD, and we're going to look at UNG. I know these are vehicles that people use to try to get exposure to natural gas. So bigger picture, let's zoom out here. All right, we're not in the 15-second chart anymore. This is your daily chart. And the same way that we have just to go back to that, just to be like crystal clear, this candle, you can almost kind of think of this whole structure as your swing low, right? So as long as we stay above approximately the 360 level, we have a swing low in place, right? And if we think about the daily chart, we're trying to print, the next step would be to print a daily swing low, right? That's how it works. That 15-second swing low, if we get enough follow through, will become a daily swing low. That means Monday we need to trade above the high from today. That high is $3.84 there, or excuse me, $3.84 thereabouts, right? So if we are able to do that, right, we get a candle that's something like this that crosses above this line. That gives us our swing low. We haven't had a swing low in a really long time. This was a swing low, just to be clear, in real time, but it obviously broke down really quickly. It failed, and so we're gonna watch to see if this one can be a little bit more durable. And again, because we broke below that 360 level, and as we looked at in the previous video, that's also the yearly low. So we've broken some important levels. We probably triggered a lot of stops. There's every possibility that this could be our daily cycle low on day 21. Just like we had a daily cycle low here on day 21. The exact date is not important, folks. That's not like a special thing. It's just the idea that 21 days of price action is long enough for a complete cycle, right? More or less. So you have a 5-day rally, right? As we've been saying in all these videos, very feeble, nothing to get excited about. And then you have, 16-day decline. Now, very possible that we get a longer cycle like this 30-day one or 33-day one, so you have to be aware of that. I tweeted this morning around 10 o'clock. I said, you may as well, this is where one might want to take their shot, because we did take out that important 350 area, we took out the 360 level, and then we moved above it, right? What is that? That's a false breakdown, right? We took out all those stops. A ton of people got stopped out. And then we price reversed. That's usually a pretty bullish signal, although we're obviously giving back a lot of gains here, and it's more of a doji than anything else. But again, 3.839 is the level for Monday. We can trade above that. That gives us a swing low on the daily chart. And if we look at the weekly chart, what we'll really need is a swing low on the weekly chart, and that's a taller order. We need to get above 4.394. Right, and so that's what you're going to be looking for. First, that move to confirm a daily swing low, and then is that daily swing low going to become a weekly swing low and possibly a longer term cycle low? And I mean, man, look at this chart. Look at this monthly chart. As I've been saying, and I'll get rid of some of these lines. I'll get rid of the price line. That can be a little bit distracting. As I've been saying, these pivots look like a magnet. That's where the 360 projection came from, right? The idea that because we're in a downtrend on the monthly chart, it makes sense that price would come and retest a level like this that we aggregated at before, but we're not out of the woods yet. You could easily see price come down and test this kind of zone, which is right above $3. So still quite a bit of potential downside. But again, with the right stop in place, and we looked at that, I mean, you might even use the 15-second chart to decide, look at the big picture structures on the 15-second chart to decide where one might put their stop. And we'll talk about BOIL and KOLD specifically. Well, KOLD is, you probably want to be careful there. That's the inverse. So, and we'll look at the yearly chart finally. Again, just as a reminder, we broke below the low on the yearly chart, meaning, the yearly chart, every candle is an entire year of price action. And so that candle from this candle, let's just zoom in here. Let's get rid of all these drawings. It'll be easier to see. So you see this price line here, right? That red thing. We dipped, this whole candle is 2022. We dipped below it, and now we're reversing. I talked about that. That's a potential false breakdown on a yearly level. We're going to have to see if it gets followed through, right? And the most bullish, sort of outcome here is something like that, right? Where price already made a new low, right? And so price goes and makes a new high above the candle. I mean, that would be a freakish, amazing candle for 2023, making a new high above 2022. But it is entirely possible. And it would be an amazing trade the whole way up. And so I'm not saying that's my base case. It's actually not. But the price action does what it's going to do. And so if it looks like that's what we're headed for, you want to make sure that you're positioning yourself for that. And so let's move on to the vehicles that people generally use to trade this thing. So let's look at UNG. So is this thing finally washed out enough? This is your non-leveraged bullish uranium play. And so with this one, the swing low level, you need to cross above $12.29 to have a swing low. That's UNG. That's a daily swing low. And on the weekly level, you would need to get above $13.41. The way I think about the weekly swing low level at this point, since we're in a downtrend, that's ultimately your price target, right? So if you were to get long here, expecting much more upside beyond 1341 is probably a little unrealistic. Although, who knows, when price gets there, we could see it just blast through and we'll have to react accordingly. But your expectation would be maybe a zone to take profits, maybe some place where we're going to see some supply start to kind of show up. And as we think about each successive time frame, right, has its own kind of level. So again, weekly is $3.40. The daily is $2.29. That's UNG. Let's look at BOIL. That's the other bullish ETF. And so BOIL is in a slightly different spot. That needs above, and this is the one I'm using as a trading vehicle here. That needs a move above $12.63 to confirm a daily swing low. So we need to see a trade above that. Again, $12.63. And then on the weekly level, that would be a move above $15.73. So again, doesn't mean we're going to get all the way back there, but we would need to get back there for this to be a weekly swing low, right? Like that, right? And again, if one were long, you might think about that as a level where you want to lighten up. You want to start to take profits. If someone is trapped in a position, for instance, and we manage to get back up to that zone, maybe that's a place where you lighten up. You're able to kind of get out. You cut your losses, as it were. So that's BOIL. And of course, the other side of this trade is KOLD, or there are a few options, but KOLD is one I've been looking at that has been, it's the inverse, right? And so if we kind of think about where this thing is daily cycle wise, this was your last bottom and we're now at day 29. That's pretty long, right? Like, let's see. This rally was 15 days. And if we count this rally from here to here, that was 41 days. If you count it, if you're more conservative this is our way of saying, wait, this is a way of kind of triangulating things. So that rally was 28. Wow, that rally was exactly 28 days as well. Oh, no, that's not true. That's just a little bit less. 27 days. So this rally has lasted 29 days. This one lasted 27 days. This was 14. So it tells you it wouldn't be surprising if we are getting a more sustainable bottom here for natural gas, which is to say, maybe this is our daily cycle low, because this is an inverse ETF, right? And so when this thing prints a swing high, that signals the bottom for natural gas, because this thing would start to decline. This thing would start to move into a downtrend as natural gas moves into an uptrend. So what you want to see is a move so when I say is what you want to see to confirm that we're getting at least a short-term bottom for natural gas. you would need a swing high on a daily chart, and that would be a move below $35.32. So that's the level for KOLD on the daily. And on the weekly, you can see 3 nice green weeks. What's the percentage increase been here? Let's say from like this level here. Wow, nice 126% gain. So for this one, you would need a move below this week's low, and that is $30. So $30 even. We're here at 36. So notice those numbers. That's a 20% move down from here, just like that. And that's important because you'd have an indication that we're probably going to hit this level well before we get there. Like, we don't have to get all the way to 30 for you to say, oh, okay, this is definitely the top. But that would signal that maybe this is a weekly cycle top as well. If we start to make if we start a downtrend on the weekly level, like this downtrend, right? Or this really ugly downtrend. Again, this is the inverse. So you're expecting swing highs when you get a swing low on natural gas, and vice versa. So watching this along with UNG and Boyle should give you a good sense of what side of the trade that you want to be on to extract the most out of the natural gas trade over the next couple weeks, really. And what we're going to be watching for is this daily rally going to turn into a weekly rally, which potentially turns into a monthly rally? Going back to natural gas, or let's stay on these first. Let's go to Boyle. The other thing that you want to be aware of is what level does it take for the monthly chart to go green? So for Boyle, it opened at $15.16, right? So that's a nice amount of upside from here, right? Like, you would imagine a little rally would at least get us back to green on the month. And for UNG, that is $12.81. So those are the important levels to know. And natural gas itself, opening price for this month, $4.36 approximately. So understanding those key levels will be important over the next several days and weeks as we try to kind of work through potentially trading this. Again, it's a wild one, but if you use price action to ascertain where we are in a trend, it can be golden, right? And so we're going to leave it at that. We'll continue to watch this, and if you're not following on Twitter, definitely take a look for a link in the description. Because as I said, I mentioned that around 10 a.m. this morning. I'm obviously releasing this video sometime in the afternoon, so I'm going to be able to give more real-time updates on Twitter. We'll use this channel for more detail and make sure people kind of understand how one might trade it, how one might look at the charts. But we'll leave it at that for our natural gas update for, again, today, January 6th, 2023. A Friday. Everyone have a great weekend. Thanks for watching.